Hi there and good morning and welcome to the Trade Setup right here on BloombergQuint Live. It's a new week of trade and it's an interesting week of trade simply because we have the fag end of the earnings season. There'll be some reactions today, and from a global data point perspective, viewers, it's a week with very few really large data points. So maybe the markets would gyrate more to flows as opposed to events, and of course some numbers as well. First, whatever the US markets did notwithstanding, I think the mood today is more important. But there is a wonderful chart on the Bloomberg terminal which speaks about how the small caps in the US markets seem to be slightly overextended. Look at that. The Russell 2000 is the most extended above the 50-week moving average or the 200-day ever. Now, we did an event with Andrew Holland and Hiren Ved and Prashant Khemka on Saturday, wherein Andrew was expressing this concern that with the kind of moves that the retail traders have seen and the gains that they've seen, maybe India is not quite there, but maybe US markets or some of the others are showing some technical signs or historical signs of there being some bit of a toppish behavior. I don't know if this is also one of that, but for now, the small caps are rallying on. Anyways, so the long story short, there is a bit of optimism there across the world. Asia, when it started off today, some of the early risers were not doing all that poorly, I have to admit. So there's HSI on the screen about 0.6 odd percent higher about 10 minutes back. Kospi's trading with some marginal gains as well, if I'm not wrong. And the SGX Nifty will come up on your screen next, and it'll show you what we are likely to do on open. Now these rates change from 15 minutes back to 15 minutes now, etc. But yeah, convincingly above 15,000 excuse me, is what seems to be the case for the Nifty. Remember, we already touched the magical figure in Friday's session. Let's wait and watch what happens going ahead. Now, what is the trade setup looking like? I think there's this story on the BloombergQuint website. CK Narayan, Dr. CK Narayan writes for us every weekend, wherein he speaks about the technical picture for the week or for the month. In the story published on Saturday and Sunday, or published on Saturday, I think, in amongst the other things, if we just take the story below, there's this chart which shows how the Nifty futures are just so extended right here. So since late December, so the Nifty futures have moved up quite significantly, and the new highs after this low means the uptrend continues as per technical indicators from Dr. CK Narayan. Now, I urge you to try and log in and read more about this story on our website. It'll give you a sense of how the technicals are set up for the week and the month ahead. So it might actually help you quite a bit. So do try and log in and see about this. Now, my trade setup is simply this, right? That unless the sentiment in the Bank Nifty were to weaken, I really doubt that the Nifty will see a big decline, simply because viewers keep this in mind. Nifty Bank, Nifty IT, Reliance Industries, the three top heavyweights and contributors. Both Reliance and the Nifty IT are actually not trading at their peaks. They are trading close to the troughs, recent troughs, if you will. Reliance for sure. So if the Bank Nifty is not to correct, it's very unlikely that the Nifty will see a big drop, or even if it sees a big drop, it will not get bought into. So that's the key thing. I spoke to a bunch of institutional dealers over the weekend, and all of them seem to suggest that this week might belong to Nifty Pharma. Now, various reasons for that. There is some institutional buying that has happened, HNI buying that has happened in specific names, as per what they have told me. So it'll be interesting to see what happens, but just keep in mind, keep an eye out for Nifty Pharma. Some of the pharmaceutical names could well be in focus for the rest of the week. So you have to be mindful of that, both on the FNO side as well as on the cash side. So please be careful of that. Please watch out for the pharma names. And it'll be interesting to see what the oil sensitives do, simply because oil has had the best week since a number of quarters or months, if I'm not wrong. And I think WTI and Brent are up 7 of the last 9 months. So that's pretty interesting. It's close to reversing the pandemic losses. Let's wait and watch how it shapes up. But all of this, what does this mean for what happens to individual stocks? Keep in mind, the oil sensitives will be in focus. The FIDI data was pretty much negating each other on Friday, so I'm not bringing that up because a lot of stocks that we need to focus on. The stock of the day, to my mind, one of them, of course, has to be Divi's Lab. Now, the numbers came out post-market hours, of course. Revenues were up about 22%. Gross margins up 820 basis points. EBITDA up 47%. Adjusted PAT up 43%. And they saw healthy traction in the generics and the custom synthesis business both, coupled with lower raw material cost. The beauty is, viewers, on the con call, the management said that this is just the beginning of the growth. And I think Q4 and Q1 onwards, you will see the growth curve. This explains the bullishness of the management for business ahead. We have a wonderful story up on there which combines what the results were and the entire details of the management con call. You may want to log into our website again and try and read about it. Now, people may argue that the valuations are expensive. It trades at about 50 times FY21 EPS and nearly 38 to 40 times FY22. So I've taken the average of 39. Some people have it, whatever, it depends on the estimates that you have for FY22. But this is not deterring people from going out and making a case for DVs. Now, I'm bringing to you the Goldman Sachs note on DV's lab. They have said that they maintained the buy rating. The target price has been raised to 4440 from 4280. Now, this happens because the earnings estimates go up, or maybe the valuation multiples also, but I doubt that this is a valuation. It's actually an earnings-led upgrade, I would reckon. They believe that the major highlight was the gross margin expansion, and that the company has recently doubled the nutraceutical segment to support meaningful growth over the medium term and beyond, and it remains a part of the conviction list. So this is the point that I'm making. It's trading at 50 times. Goldman knows it too, but they're going out and upping the price targets post the quarter, and I think post the con call. Very buoyant con call to watch out for DV's lab. Some of the other stocks to watch: Britannia. I think the volume miss might disappoint the street. It is an expensive stock, no doubt, but it was offset by the enduring margin strength. The reason I bring this up to you is because you got to watch out for Britannia in the second half of trade today, because most brokerages would actually update their call post the conference call later today. So therefore, maybe you got to watch out for Britannia, not for the first half, but the second half of trade. Be mindful of that. The other large cap, which came out with numbers, was Mahindra and Mahindra. Now, the reason you can dwell upon the numbers, but I think the management commentary on Mahindra and Mahindra is more important, and therefore I bring it to you. They say that the rural outlook is strong, backed by rural infrastructure push and good crop. The tractors could show a 20% growth in FY21 financial year versus 12% guidance. So they are actually so optimistic on tractors compared to guidance. They say that the auto sector demand is strong, with the 40,000 order book for Thar, 2.5 months waiting for XUV 300, and supplies constrained and inventory levels are very low. This is the thing. Now, what could hurt Escorts, M&M, as it hurt Escorts midway in the second half of last year, was that if supply was constrained, they were not able to meet the demand, and that's a problem, right? Now, I don't know. M&M is not facing such issues, but if indeed the demand is so strong that they are saying that the supply is constrained, it tells you a story about the pricing power that some of these companies might have, because inventory is also very low and the demand is looking strong. So I would watch out for Mahindra and Mahindra. Remember, viewers, Morgan Stanley had that very large upgrade on Mahindra and Mahindra. They took the target to 1112. It's trading at about 865 thereabouts. So it's a stock that you have to watch out for. Mrs. Bector's, it's the first quarter post listing. It's a strong performance. Q3 revenues were up 11%. EBITDA was up 40%. The PAT jumped 86%. It was boosted, of course, by lower finance cost and a higher other income. It's an interesting stock to monitor simply because it was very heavily subscribed and came off a bit as well, has bounced back a bit, but the numbers are justifying the kind of faith that the IPO investors had in this one. So watch out for this one. I would watch out for Gujarat Gas for sure. Very strong quarter. Volumes grew sharply, 23% YOY growth in volumes. Can you believe that? 11.5 MMS CMD was the kind of number that they put out on the volumes front. The lower than expected gas cost, of course, boosted the margin for Gujarat Gas. And it benefited from the lagged impact of LNG price increases and also from a few advanced spot cargo purchases at Gujarat Gas. Now, Jefferies' report, of course, is very bullish on this one. They came out this morning and have said that they're very impressed with the results. I would watch out for Gujarat Gas as well. Mangalam Cement was the other one that had some good numbers. I'll watch out for that too. And NMDC is the sore spot. They've cut prices of fines and lumps by about 600 per ton, which is about 11 to 12% cut in both fines and lumps. Do watch out for this one. And I will watch out for stocks like Concor, Shriram Transport, Mahindra Financial. Concor in particular, because I think in the con call, the management gave enough and more indication that don't be worried about the land license fees. We have it sorted. There might be noises that you might be hearing, but I think we know what we're doing. I think that was the sum and substance of what Concor had to say. It could well turn out to be an interesting stock to watch out for, viewers. So there's one more name that you have to keep at the back of your mind. A bunch of stocks, as I said, which are likely to react today. I still pick Divi's as a safe and as a key stock of the day today, simply because of the management commentary. But the commentary from some of the others is also not looking all that bad. So you have your hands full today in terms of the number of stocks that you can trade. Watch out for the NBFCs, as I said, Shriram Transport, Mahindra and Mahindra Financial. They have some triggers to themselves in terms of brokerage notes, etc. A bunch of stocks that could react today. I hope you have a great trading day ahead and a safe trading week ahead as well. Thanks so much for tuning in. Do log in and try and read that piece from Dr. C.K. Narayan or the con call excerpts of Divi's in the story filed by my colleague Hormuz Fatakia. Thanks so much for joining in today.